Greetings, market rebels. Welcome to this week's macro measure combined with the sector situation video. Here is our trusty market rebellion disclaimer. Here is our trusty intellectual property rights notice. Here is last week's slide. It is Friday, December 19th, 2025, and it's about 3:23 p.m. here in the East Coast. I'm Wayne. Here's a flashback with some highlights. Just going to hit on these very quickly. This is probably be a shorter video. I've got some real serious time constraints. We settled for most likely scenario. Excuse me, very difficult to call due to conflicts. We went back to go with the flow, be very nimble, expect news since market not behaving carefree. So basically, this is interesting because we did sort of have the slight negative lean, I think. Increased chance negative news derails things a little bit. That was ultimately more of the final, hey, what if we had to make the call? What would you think, right? Just because things kind of ended on a sour note last week. And so that's what we went with. We did have a rough start to the week, and then there was the anticipation of I guess the yen situation on Friday, and then there was there were numbers due out. There was, excuse me, I believe Micron's EPS. There were numbers due out that were key, and then there was this Trump speech, which people were speculating could have some negatives. So maybe that's what happened. You got a little bit of discounting in front of all that, and then you got so you had your trepidation in front of it, then you had relief afterwards. So just throwing that out there, not taking credit for anything or what have you, just simply saying maybe there was something to that, and then as is often the case, there was really nothing there that really, I guess, derailed the market. So you get yesterday, Thursday, and you get today's follow through, which have both been good. So that kind of erased a lot of relatively negative stuff that was happening from Monday through Wednesday. Um, we said maybe we needed to see a little more scariness before we got on the runway for the Santa end of year. So maybe that was part of that. Let's see. We said that bottom line game plan, you got to go with it. Below the 50 SMA and the spies invites bigger trouble. We'll talk about that. Excuse me. Gosh, excuse me again. And then we said if we got back in the channel, then it would bring back, the better vibes. And we said, look, seasonality wise, trends still up. Still have to finish strong, but monkey wrenching looks more possible. That still that did look like the case, but so far, right, we haven't gotten that, and the market seems to be finishing well here at the moment. So I had to go with a little bit of a pause there, and I don't normally get calls during this time, but it was I figured it was important. Unfortunately, it was. So getting back into it, I think that pretty much wraps it up. We were just saying that monkey wrenching was looking possible. The technicals held. Could always happen on news, right? But right now we're switching to a different gear, I think, with what we saw this week. So here's this week's slide, and I'm going to basically just go with the trilogy. This will be the third week in a row where it was like, okay, what's really happening here? Really, the consolidation factor has set in, put another way. But I would say at this point, with only about a half an hour to go, all's well that ends well. Let's go out more positively. I think there was OpEx stuff happening today. There was post-Trump speech relief. We have to ask, is it a mirage? I'm not saying it is, but you have to just always factor in that when there's expirations or holidays, especially this being the largest options expiration. Did that influence things? Are they keeping it away from danger? Do we revisit danger? I'm leaning towards no, but I don't want to skip over that and not mention it. So here's the summary. The trading and technicals have not been great. But what I'm getting at is that does this lackluster fall that we've had and the December that's been lackluster, which all this amounts to relatively mild corrective action at this point, does it set the stage for a good start to the new year? And I think you're close to doing that. I think that's the silver lining to this not being so far a very great finish to the year, a very great fall. I thought it was going to be a lot better. So that's where I'm at. We have the holiday bullishness coming up, usually bullish in front of large holidays in the US. Then you've got the so-called Santa rally, which some people are now, I guess, of recent years have defined to be the last 5 days. I guess starting with Christmas Eve and then the first 5 days of trading, kind of going into going into the new year. So maybe. I mean, we'll see. I think seasonality is worth keeping an eye on. We do, and so are little wrinkles like that within seasonality. I just don't like to bank a lot on them. I really want to see the market technically poised to trace that out more so than just assume yes, it's going to somehow, some way. But it's starting to look better that the case is getting better, in my opinion, that it could actually do that. The AAII survey was just about the same as it was last week. It's still tilted bullishly pretty firmly. And so I'm wondering, right, if that's been part of the problem where for many weeks we haven't advanced, and yet that survey just continues to register. So it's almost as if it's holding us back in a way where too many people are bullish, not enough people are bearish. The market loves to confound people. And so far, I guess there's been a lot of confounding and no advancement, right? Where you haven't really gotten there, but you haven't really had a big sell off either. And now the VIX is way back down. So, you're getting into the 15 range. So that's potentially a good sign. Not a shocker, right, with the holidays well, upon us, essentially. I would say this week we had a fine week in sectors and breadth. If you look at it in total, it really wasn't a great week, but it was fine in the sense that it didn't deteriorate all that much when the market was actually having some rough times earlier in the week. So now that you're back on a little bit better footing, it's really not the end of the world. And maybe we start to see really these megas do their thing. We've been keeping an eye on them, and they have been tough as a package where they just didn't look very good. But I would say that most of them, the ones listed there, they look better, right? If they finish hopefully strongly here today, or at least get started strongly on Monday, they could really start leading things back up. So I think those look primed. The other megas do not to me so much, but it would not take all that much for them to join the party, as I'm saying, because they're not really in a terrible technical position, in my opinion. So this let's move into the specifics now, and we'll come back and wrap up. So let me just stop the share. We'll get right into the specifics. I didn't mean for this to be a very short video this week, but it fits really well because I've got some important market rebellion stuff happening right after the bell, and I also have some rough news that I just got. So it's probably a good thing that we don't have a ton to cover. So let's go with screen one. And then let's talk about the SPY. So I was talking about this in one of our webinars, and this is what some people, there's a lot of names for all these things. This is what some people will refer to as that sort of pitchfork bottom. You can have a pitchfork top naturally too, if this is sort of inverted. But you had the spies, as I noted, right, sort of dropping here Monday, Tuesday, Wednesday, and then Thursday, Friday. So you had that sort of real spike there midweek, and then you have these two candles on either side that hold the 50 there in gold, where you stay well above this low. And that's often a good sign that can at least start to springboard things back a little bit. Plus, it starts to trace out something more in line with this inverted head and shoulders that we've been discussing now for a few weeks that could end up firing and potentially either, of course, false breakout potentially, but also could really launch a strong rally in the relatively short term or near term. So that's the good point there. The other good point is that this line, which we were working with, once again became important, and I would say you got below there, and that could have created a little bit of a flush for some technical traders, and they lifted it right back from there. Now, that's the question. This is OPEX today, right? You've got the post-Trump stuff all, as well. So is this sort of just relief and a 1 day or 2 day wonder, and then you have a lower high here, right? You have this high here, you come down, you then make a lower high, and then you start coming back down again, possible. Or, right, do you start really working your way towards completing the right shoulder on the inverted head and shoulders? So right now, you're very close to overtaking all your SMEs again. As of right now, you just need to get to about 682 and you'll be above the 15 SMA there in red. And that would put you above all the SMAs, most of which, as you can clearly see, are still upsloping. And I think that's the comment that I've got on the slide. If you step back and really just say in a very simple way, right? I think I wrote, stepping back, seeing it simply, putting it simply. If you look at it that way, we've really done is consolidated above your key longer term SMAs, and we've done that, right. And obviously, we've been able to maintain the trend, right? So if you just look at it in the most simple way, or one of the most simple ways, that's pretty good. Now, other people are going to make the case, well, this is a high here, it's a double top, and there's going to be a leg down. And I'm open to that, right? I'm not ruling that out. I think a lot of you know me, right? I'm trying to get everybody as traders to go with the flow. And that means not being locked in to a certain strongly held position and simply trying to adapt to the market conditions so that you are doing well in the short run, because that's what most of our trading is. It's mostly swing trading. Sometimes it's only for hours, but most of the time it's for days and maybe for weeks with most of the services that we have that are momentum based. So there's that. That's really where I think the assessment is. You could say, well, why wasn't this more forceful? I don't know. It could also be related to OPEX. But the point is, right, you have this dip. This is a higher low. And right now, this thing should be poised to go. And as I typically note, if we don't start, assuming the news is relatively neutral, and you're coming into this big holiday week that market typically likes to rally into holidays, through holidays. In this case, it's after the holiday or right at the holiday, go, go, go. It would be not only would it be disappointing, but it would really be a change of character, and it would almost be like a pass, taking a pass. So bulls would again be saying, no, I'm not really ready to buy at a time where you would think they should be ready to buy. That's really the key right there to me. It's not acting the way it really should or would be expected to, all things considered. So if you're not going to work with holding support, and you're not going to work with your trend, you're not going to work with a good bounce formation on the candles, and you're not going to push further right into a holiday where you typically would up into and through, then something's amiss, right? And there are things that are amiss. We talked about this percolations way back. We were skipping over them. We mentioned them here and there, but everyone at this point, what were just percolations that very few people were paying attention to in, let's say, the mainstream media, financial media, those things like, right, the Oracle and other companies with their debt insurance, the yen situation, which was, I think, telegraphed, and I talked about that this week as well, where that was so well known and telegraphed that the Bank of Japan would be doing what they did, that it became discounted, right? I would you never know for sure, but my guts were just telling me, right, this has been discounted in by now. That they're not going to react when this happens. It'll probably be sometime after if it starts causing problems, but you don't know for sure. But anyway, that's the SPY. And so coming into this, right, I think you start worrying when you get below the 50 again. So the 50 is prominent, probably get a lot more worrisome if this low and our support line are getting taken out. Then you're probably looking at another leg down to the rising 100 there in white, right? That would be one scenario. The other scenario is we get above here and you just continue. I think this is probably your most likely scenario. You just start working above there and it's a little bit lazy, maybe. This would all be news neutral assumptions. it's a little bit lazy for a while, and then by the end of the week, they just kind of work it up. I would think, and then that sets the stage for the final trading days of the year, and they try to maybe goose to new all-time highs or at least dangle around there. That would be my thought process there. But not everything is the SPY. We use the SPY as our proxy. We don't chart SPX. One reason is for time. The other is because most people like to trade the ETF that it's a lot more and use the levels that we're working with. But this is obviously very similar, right? You're very close to being back above all your SMAs. You still have to get above the 15. Again, the red 15 is up there, but this is the Qs, and clearly it's a similar situation, right? So you're not really back above the trend the way you were, but you can really see that what we've done here now, ever since topping out in OCT, is really just consolidated above trend. And so things are not that bad. I mean, if you want to make the argument that they are, I'm sure you could cite a few things like, hey, this, that, and the other thing. But technically, just at this snapshot in time, I don't think it's that bad. And I would add that we've talked about this for a while. I would add that the small caps trying to join the party, making a new all-time high, now backing up here and looking like they're, after correcting, that they're on the cusp of maybe going. I think that's also a good sign. The other major index ETF, which is the diamonds, they did make a new all-time high. The most recent, I guess, of them, the SPYs and Qs, and they're close to being right back above all the SMAs again, as well, right? So that area looks that this bigger company area looks kind of interesting. There was a little bit of UOA here today in ALB. Albemarle, and it looks like it may have popped through our trigger and maybe hit one of our targets, and now it's backed off. But I didn't even know that happened. But anyway, this one has been working a lot better. I told everyone to keep an eye on ADM, but it just couldn't break out. It just, unfortunately, I think ADM is worth keeping an eye on, just because I think that materials and things like that could start to do better. They really seem to be holding up. They're really on the cusp. They don't really want to go down much. It doesn't seem like at this point they're above all the SMAs. They've been resting, so to say, for a long time, and so they've got the energy there. Now, this is not a big mover, but you could get into some of the names within there. So overall, going back to diamonds, just to wrap that up. So this doesn't look as poised as Qs and SPY, but it has been lagging at times, and IWM has been left behind at times. But the other ones are looking a little bit more perky, and that looks on, as I noted, that looks on the cusp. Just needs to take out the 15, and then this looks like it could take out the 15, and that's really it. You could say, well, what about fibs on the way back up? You could say, well, what about flat lines on the way back up? So on and so forth. What about volume profile? What about gamma? What about the gravity of certain strike prices? All things considered, we can't cover all that. So we're going off of the basic things. And I'm just going to say that I think, right, with this higher low in place, you would be disappointed if this were not to work its way back up to at least here. So maybe this ends up sort of being an ascending triangle. In the end, you get up here, you come back down one more time, and then you really start getting to the apex of the triangle maybe after that. And you really should go an ascending triangle in an uptrend that's remained intact. You should go to the upside, right? That would be your default expectation, without having anything good to latch onto as a bear. And as I said, I wouldn't call this a stellar performance this week in terms of the market breadth that I'm going to flash here, but this looks pretty solid, right? You did back off. You did have a rough week. We said there maybe needed to be one more scare. Maybe that is the scare this early week we had here. And now we're getting a little bit better in terms of market breadth. And in terms of some of the sectors, they were also at a juncture where they were looking a little concerning. But at this point, because everything's everything's managed to hold it in there to the degree that it has. They don't really look bad, and some things are starting to perk up. So XLI, that's starting to perk. XLB is starting to perk. This is a nice, at this point, still relatively mild pullback in transports at this point. XLY made a new recent high at the very least. Let me see if that's an all-time high. I don't think it is, but I could be wrong, so I'm going to bring more data. Well, maybe it is maybe it is the all-time high. So that's the discretionary right there. Let's get a 5 year weekly. Yeah, it actually is the all-time high. I didn't realize that until just now, clearly. So yeah, so that's I mean that's a better sign than I thought it was. I still for some reason I thought there was another high up there that had to take out. Staples have kind of stalled out, which again I think bullishly you want to see. If this is the pullback that you get after this kind of a real serious impulsive move, this is so mild. If you do that and start to go again, I think that's potentially very good. Healthcare hanging in there, real estate hanging in there, finance new all-time high. I think I talked about a trade we had in there, and probably most importantly. The energy disappointing again. Nothing new there. It's been happening for years. It's slowly but surely, though, keeps working. As long as it holds here, it could maybe start working its way still into more of a constructive future. We'll have to keep an eye on that, but just hasn't had the mojo in a long time, as most of us know. But look, XLK, we were worried about that. Didn't have a great week, but they're rabbit out of hatting it now, which is a good sign. And then this is also a good sign where very strong rally. You break through resistance in the communications. You don't to this point, you haven't given all that much back and you're hanging in there. So I think if you look at the sectors, uh, it's not awful. It's not too bad. It's fine, right? It's not a great look. So sectors and breadth are not great, but remember, we're going through at this point a multi-month consolidation in this market. So if that's what you're getting, then that's what you're getting. That's really not that bad. And we all know this is part of the game, right? We don't always go straight up or straight down. I'm never happy when we're doing this in terms of the trading opportunities because they tend to be muted. And I focus more on momentum and trend-based trading myself and for the services rather than things like the iron condors, which and selling credit spreads, which Ryan tends to do 90% of. So it is what it is. So it's just the way we've split things up over time. But yeah, so anyway, if you look at these four, our grid of four, I think this doesn't look terrible. It looks like these two big dogs look like they're ready to try to ascend, and they could start to pull the other ones along with them. So that's the look there on all that. What I want to do with the remaining time I have is just wrap up the comments and then look at these. I'm going to go through all the so-called megas. Well, not all, but most of them. And I would say that we had Amazon as an idea this week. There was some UOA that came in. We got it in. We also had it as a momentum name as well. Didn't really, given what the market's done, they pretty much track the market. So you can't complain there because that's part of our formula. We want the stock ideally to work with the market so traders can have confidence that the wind is at the back of the move that our momentum name is experiencing. And a lot of this is trying to get into very reasonably priced options near the right levels. That way, if movement does develop, people can get in on a value and hopefully get a good ride. But look, all you got to do is take out the 50, right? The 50 is 20 cents away. You're above all the other SMAs. So, and right, I think for me at least, and a lot of you know how I am, and I would say, look, this is probably even more important. I just didn't have time to put this stuff on here. You're very close there. You're very close there. So with a higher low, getting above all the SMAs, and so I think like, look, that's pretty encouraging at this point. It's not quite there. You still need to break out. It needs to be a real breakout. It needs to hold above there. The whole works. So never give up on the false breakout until you've got the money in your account. You've collected all the money from the breakout, right? Then you can stop worrying about it. But that's the whole thing. You always have to be disciplined that way. But that's to me is pretty encouraging that it's on the cusp. So I'm calling that part of the ones that are on the cusp. I'll go through Apple. Apple to me does not look like it's on the cusp, but right, all this really has to do is start to turn and burn off the 50, right? And for Apple to do this in maybe a couple sessions, that would be no big deal. And that's what I'm saying. That's one of the ones I'm leaving off. And you'll notice I skipped over that one because it needs to do some work before it gets to that juncture. But yeah, if it gets to that juncture, um, because the other ones are, then yeah, it won't take much. It'll be another test of the 50 that held. Yesterday they flushed out some players probably there. And now, right, it would be almost like perfect, right, in terms of what they do technically to start lifting this thing back up again. I think Meta, jumping forward, well, I jumped over, my bad. Did I jump over Google? Let's see. Yeah, I did. So Google's another one that's lagging a little. I think it's got to get up to the 20. That's still about $8 away. So that's the blue line there. Gets through the 20, it's a different story, but that's still a little bit further away, right, than the other names that I'm highlighting. And the next one, of course, will be Meta, which I think is closer, right? So a lot of these megas are, and there's no guarantee that they go, of course, but I'm just saying, look at this snapshot in time. You got this sort of a cup and handle. You've got this, excuse me, SMAs are starting to round up. The shorties are at least, and you're really close to the 200. You're closing near the high of the week. So this is really close to breaking through the 200 with a higher low in place and momentum from the SMAs starting to sweep behind them. Should be a good one. I got to think that given where this was, right, these guys would probably love nothing more than to mark up one of their core holdings dramatically between now and the 31st. Maybe I'm wrong, but I'm just saying I think a lot of things look good here. Is it out of the woods? No. It just needs to do a little more technical work. And a lot of the chart work that I do will be flipping nicely. So I think that one is also teed up. Microsoft, which has not been looking good for a while, is definitely teed up. I think you can see that with sort of a double bottom, a second test of the 200 in purple, dip below there, close above. And now, right, it is working back off of that in Microsoft style, sort of slowly but surely. And then really, it almost seems like it has a date with destiny at the declining 50 there in gold, which is right near the 150 in rust, which is basically $500. So to me, right, if I saw UOA on this yesterday, the way it was behaving today, a little bit of disappointment, but holding above the short-term estimates as of now, I would definitely be excited about getting that one in because of all the things we've discussed. Assuming there's news neutrality, right? That's all I'm saying. Assuming news neutrality with holiday coming online, seasonality coming online, this thing is poised, in my opinion, to try to work back up. And honestly, which of us would be shocked if they worked up some of their main holdings to window dress them from where they are right now, and how it was some of them have really declined. Maybe the most important of all, given its place, the place it occupies in this market, is this one, right? This NVIDIA or NVIDIA, I'm still not sure how to say it after all these years. But, that to me is really close to breaking through resistance. I don't have a perfect line there. I could tweak it a little bit, but you get the idea. And so that is I've got an idea on in this one. It popped. Hopefully, folks made a little money on the pop, but then it dropped. So hopefully they took their money and ran. But we still have an idea. I believe in this one. And I think this is looking like it's on the cusp of taking out that 100. And so the 100 is excuse me, at 182.35. It's only $1.50 away, excuse me. And that leaves the 50, 185.65. And then you could say, well, then what about this is high? Yeah, you could wait for the 188. But I would say, look, this is showing the signs. I think you have to like this right here where they put a lower low together over here. It's a similar low, so it looks somewhat like a double bottom. You've got the 150 SMA there in rust that it dropped below, which again, a lot of people track, and it's something that could help to be something where there's a flush out. And now it got pretty oversold at this juncture down here, right? You were for NVIDIA, you were probably the most oversold you've been in months. And then they now are starting to try to work it back up. So to me, right, that looks pretty encouraging that if that can go, what that will do. And that's why I talked about to sort of sidetrack it briefly. That's why I was going with SMH here in cocktail hour, because so many people were on the call. They had asked us to just be able to discuss one name. And so to me, this is such an important name to watch these days. And so the fact that it sort of had this higher low, sort of a little bit of a sort of a spike that maybe got some capitulation, and then they were right back at it, moving it above all these I'm sorry, SMAs, not SMH, I was about to say. Above SMAs again, you're really close to overtaking the final one with a higher low. And again, this should almost start looking like a sort of like a consolidation after a long run that looks a little bit like an ascending triangle, maybe at this point. We'll see if it works out. But this to me is a really good sign with NVIDIA being such a big weight, not only in it and the market. This should bode well potentially. So that's also interesting. One we also had an idea in was this week was Tesla. It did have a nice little pop. I forget when we got in on that one. Might have been Tuesday. I can't even remember, to be honest. Had a nice little pop. It's sort of disappointed for as good as it looked, I thought, and it looked really good the way it was hanging in there. I thought it was going to do a little bit better this week, frankly. I thought it would trade up towards 500 or maybe even more. But hey, those are the vagaries. You just don't know what's up, who's maneuvering within there, maybe in a big way, or maybe they want to see things stay below certain option strike prices. And Netflix. So Netflix also has an idea. I was looking at this for more of like a dead cat, because it has hung out here. This one to me looks a little bit further away, but as you can see, this also just needs to get a little bit more mojo going to take out maybe this 97 level, and then it's going to start working towards those SMAs. It could start getting back into the action pretty quickly because of how oversold it is and how long it's been in bear control. So that's the coverage on those. What I wanted to note, yeah. So I did talk about the inverted head and shoulders in spies and how if it does trace out, that could really turbo things. Seasonality set to do that, but it could turbo us in the second year. That would be counter, right? You don't second year, I believe, of a president's term is not a good year typically, relative to the other years. Typically, I believe that's one of the tougher years of the four. But it doesn't preclude, right, a really great rally at some point, and then maybe volatility that follows. So no big deal on that. But let's see. Uh, yep. So we got that. We talked about that. Got holiday cheerfulness, the Trump penchant. Yeah, I just want to do the closing thoughts here. I'll bring this over, but the Trump penchant for making news, right? I just don't want anyone to sleep on these things. They're always there as reminders, because we've got where are we? I talked about that, and I talked about where are we too. So you can read those theirs. Those there. We're still not out of the woods, but I still think you're close to getting into a better position. So if this is not sort of a mirage where it was induced by just the relief, as I said, and maybe OPEX, which was the largest OPEX of all time, supposedly. So I would say don't sleep on the Trump thing at all still, but we still haven't seen the mojo. So I really wouldn't be looking at a home run market, like where you're trying to hold out for incredible gains yet. If you do start to see it sort of trade thin and move up easily, maybe they do put together a week like they did a few weeks back where they moved everything up 4 or 5% in 1 week. That would be awesome. But it's a lot to ask for a strike. I mean, sorry, holiday shortened week, and then just same old reminders because things are out there. And then finally, just have a happy and safe holiday season. So I'm going to end on that because I thought this was a pretty good week in terms of holding it together. I hope today and yesterday were not a mirage, and this will set us up for a good finish and to the year, I hope. And then hopefully we'll get a good start to the next year. I think it's given the rest we've had, there's the potential to do that. So I hope something I've shared with you helps you out this week or some week in the future. I want to thank everyone for tuning in. Wish everyone the best with their travels, with their family, friends. Hope everyone's healthy and safe and has a wonderful holiday season. And that goes for New Year's, of course, as well. because I believe that we're skipping cocktail hour due to probably a lack of interest due to the holiday festivities. So enjoy it out there, and we'll be catching up with everyone in the webinars this week if you're showing up. So take care and thank you.